Welcome to the President and CEO Focus on the Middle Market podcast series, where President and CEO founder Paul Stukel discusses middle market issues with business leaders from across the nation. Today he speaks with Ken Esch, partner in PwC's Private Company Services practice, about PwC's Spring 2013 Trendsetter Barometer Report on what private middle market companies are thinking.
Got your report, the spring report. You know, it's interesting. It's a lot more optimistic than I thought it was going to be.
Yeah.
You know, I mean, it was an 8-point jump in optimism, but I guess on the other side of that coin, there was a slight reduction in revenue growth projection.
Right.
That seems kind of anomalous to me. How about you?
Yeah, it seems a little bit, inconsistent. But I think that probably the reason, for that is that while people expect, that the revenue, forecasts may come down, a bit, for the near term,
yep.
even for a year, I think they feel better about the long term, prospects for the economy.
Right.
And that has, probably affected their view of optimism and how they feel, about the future. So it does, it does look inconsistent. But I think that the further that we get away from the recession, the more that people feel that maybe the worst is behind them, and that while the growth may be a little bit choppy, they do expect, that the business will continue to grow. So I think that that's really the source of optimism here.
Yeah, well, that sure would be borne out by the numbers about hiring, which seem to be pretty positive.
Yeah, I think we talked last time, about the uptick in hiring and that being a factor that I watched closely. And we've got another strong quarter here. Of results, and I was, quite happy to see, the increase in the net composite workforce.
Sure.
Jumping up to, 3.5 or 3.4%, which, probably isn't really significant, standing, alone, but the increases, over the period, show, I think, a real positive trend as to where we're headed. And I guess the other thing that I watch, is the numbers of companies that plan to hire and those that plan to lay off. And the companies planning to lay off, are low single digits, now. Yeah, and that makes me feel a little bit more comfortable about where we're headed and the view of companies about the future.
Yeah, hey, we talked about this last time, the issue about qualified workers, and obviously as folks become more interested in hiring, that's going to become a bigger issue. I mean, apparently, it's still a pretty big issue. 28% of respondents consider that to be a major barrier to them. Gosh, do you see any? Those two trends are going to meet each other? It would appear. What do you think?
Yeah, and what we're seeing out there now is, that companies are, trying to make, some plans and set some things in motion, to help them cover, the skill gap in the workers, that they're seeing. So for example, we see companies, doubling down on the training, that they're providing, for new hires, to close that skill gap. And then we're also seeing, some, quasi-partnership, type of activities with community colleges and others, to provide, some technical skill training, for a workforce to get them up to speed, so that they can, really contribute, to the business on day one or shortly thereafter. But companies, I think, have recognized that that there is a skill gap. It's not going to close itself, in the near term. And if you need to hire workers and have them productive quickly, you may have to make some additional efforts to get them up to speed.
Sure. I also noticed the very aggressive, at least in terms of the fast-growing companies and even some of the less fast-growing companies, the aggressive spending in IT, which I've seen in various surveys and other sort of anecdotal data.
Right.
What are folks spending on? I assume cloud, but I imagine
that's definitely some of it. I mean, I think that we've seen proliferation of cloud applications, which I think really levels the playing field for smaller businesses.
Yeah.
To get some of the applications that previously were only available to large companies with large capex budgets to put that type of application in service. But now with the applications on the cloud, it makes them much more accessible to to a small mid-sized business to do the same type of work. So that's a piece of it. The other that we're seeing a lot is work in the IT space to really understand your customer and what he or she is buying and why, and looking to see if there might be complementary products or services that you could bundle together to serve that customer, and to serve the customer perhaps more profitably than they have before. So really trying to look at the data that's available from your customers and their spending habits, and trying to learn from that to see how you can drive revenue and profitability.
Yeah.
And so I would fall under the category of perhaps like data analytics.
Yeah, right. Yeah, which is obviously a pretty hot area.
Yeah.
I was also intrigued to notice that most of half of the respondents had optimistic feelings about the U.S. economy, but actually had less optimism about the world economy, which just struck me as odd. I mean, in the sense that we're hardly growing at a rapid clip here in the States, and I just thought that was. I mean, obviously Europe must be weighing on folks' minds, I would think.
It is. I mean, I think that there, some sentiment out there that we may just be the prettiest girl at the dance right now.
Yeah, right.
Maybe not not the princess, but at least pretty good compared to maybe what else is out there. So we may be benefiting from some favorable comparables.
Sure.
But
sure.
I do think that that there are very interesting things happening in the U.S. economy that are a cause for optimism, and probably number one on that list is a changing landscape in energy, right, and oil and natural gas production, and what that might mean for the U.S. both as an exporter and with a rather low cost source of energy for production. I think that that's very positive. The other is that some of these emerging, developing high growth economies, take like China for example, and some other Asian markets. The gap in cost for labor is shrinking. I think the pricing of labor in those markets is going up at a rather quick pace. The cost in the U.S. may be coming down somewhat.
Yeah.
And with the investments that companies are making in technology to make our workers and our companies more efficient is making that labor cost a less important variable in your decision as to where you're going to manufacture something.
Yeah.
And I think the convergence of those trends is making the U.S. a more attractive manufacturing location.
Sure.
And probably starting to see some job growth, in that area, although it's very early, in the process. But I think that there's positive things happening out there.
Yeah, that's interesting. I guess I have to ask you, because it's on a lot of people's minds, and it's obviously on half of the respondents' minds. The legislation, regulatory issues, specifically Obamacare. Is there a resignation there, or is that still, because I think we talked about that last time. There just seems to be a resignation that's just going to happen, and we're just going to grit our teeth and get through it.
Yeah. I mean, it's we always ask about companies and CEOs views on regulation and how that weighs on their decision-making process. And while it's a consideration and maybe an important one, it's not a driving factor. So there is a bit of resignation to the fact that this is going to be a highly regulated area in the business. There's probably still many question marks out there as to how it's going to work and where healthcare is going to fit in your slate of employee benefits that employers provide. That they're just, I think, waiting to see what happens here.
Yeah. I mean, is there a sense, and again, you may have just answered this, but is there a sense that you can feel that people are taking a really hard look at their health care benefits relative to Obamacare and are considering basically paying the fine and pushing people into exchanges? I know that's a nasty way to say it, but that's a pretty serious consideration.
Yeah. Well, I think at first, when companies thought about the fine being, I think it was around like $2,000 or something.
$2,000, yeah.
Yeah, in relation to what you might be spending on healthcare today for your employee.
Yeah.
That the reaction was, I'll just pay the fine and get out of that business.
Yeah.
I think since then, there's maybe been more questions about whether $2,000 is really going to be the number, or if it's going to be something higher.
Yeah.
And what type of stress that puts on your workforce if you were just to suddenly get out of providing health care to employees, and whether that's really the right answer. And then coupled with what if I'm the only business that does that?
Right.
Is that going to cause my employees to rethink whether they want to continue to work here or not? I think just provide some additional uncertainty to workers or to employers. So I think that they're really kind of in a wait and see mode, to see how that develops. What is they're going to be available to the workers. What are the other employers doing, and ultimately what is this fine going to be? Maybe not in year one, but maybe over year 2, 3, down the road.
Right.
And what kind of impact are all these changes going to have on my insurance costs, right? The working theory is that your health insurance costs should either come down or at minimum significantly decrease the cost increases going forward.
Right.
But nobody knows.
Yeah, right. Well, I guess you're right. I mean, I think pretty much everybody's in a wait and see attitude about that.
Yeah.
I know your survey didn't specifically address this. It may have tangentially addressed this, but what are you seeing out there in terms of the appetite for M&A activity among private companies?
It's out there. It's probably a little bit lighter than we thought it might be. The appetite for acquisitions is probably a little bit higher with larger companies within the survey as opposed to the smaller ones. Mm-hmm. But I would have expected in this environment of very low interest rates, an improving economy, although maybe not improving it at the rate that we would like to see it. A fair amount of cash on balance sheets, for businesses. That I would have expected to see more consolidation, than what we're seeing today. That being said, there are a group of companies within our survey and others that I serve that are being very aggressive, given those factors, and buying companies to maybe add to their product portfolio and their customer base, maybe to expand into to other markets, and I think that those companies are really building a fantastic platform for future growth. And I just will be interested to see how it plays out over let's say the next 5 years, to see if those companies that are being aggressive today in this environment, whether they are really able to outdistance their competitors in the future here, or the alternative of wallowing in the uncertainty and not doing anything serves the company well. I think the ones that are being aggressive in this environment of low interest rates and fairly low multiples for to acquire a business, aren't really positioning themselves well for the future.
Yeah. By the way, I love that phrase, wallowing in uncertainty. I really like that.
I mean, who talks a lot about uncertainty is Warren Buffett. If you ever follow him, he's got a lot of great commentary about the term uncertainty and people kind of using that as an excuse for not doing something, and it's like, well, when is there certainty?
Right.
If there were all this certainty out here, I would probably be on the beach somewhere and not here today. There's just not. I mean, it's and if anything, it's probably going to be choppier going forward. That the trajectories are going to be up down as opposed to smooth one way or the other. I think that we've, as leaders of businesses, just have to acknowledge that there is a fair amount of uncertainty out there. There's never going to be kind of a perfect point to make decisions, and that it's likely to have more pronounced increases and decreases as opposed to some sort of smooth upward trajectory,
which I would think fits a private company very well. I mean, of all types of capital structures, I would think a private company, a middle market private company, which is large enough to probably sustain those ups and downs, and doesn't have to deal with quarterly reporting to angry fund managers. I mean, I would think they would be perfectly suited for that kind of environment.
I think a lot of them, being private, they don't have to answer, like on a quarterly basis. So they tend to take a very long view about their company, what's important, how they're going to be disciplined, about their strategies. On the other hand, that can sometimes slow a decision making process. Right?
Sure, of course.
They may be a little bit slower to commit to a strategy, particularly some sort of growth acquisition or a growth strategy based on acquisitions. But I think the good news for them is they don't have to answer on a quarterly basis. They're less likely to make a quick decision that could turn out poorly.
Be sure to check back for future editions of the President and CEO Focus on the Middle Market podcast series. Thanks for listening.